Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is host Richard Bernoulli. Today is Thursday, February 22nd. We have Judd Hirschberg back on the program show. Judd is president at White Wave Trading, a trading company. He's run several proprietary trading groups and has over 50 years of trading experience. He has developed awesome indicators and a repeatable process-based approach for trading the financial markets. Prior podcasts with Judd have focused on his approach and methodology and also updates on the financial markets. And that's what we'd like to understand today is the focus on what Judd is seeing in the financial markets across asset classes and jurisdictions. Welcome, Judd.
Thanks, Richard. It's a pleasure to be back. It's always great to do these. And I love listening to all the FRA product. The last couple of podcasts were exceptional with Bookfire, and Whalen, and Ira. And then again today with Larry McDonald's. Really a lot of food for thought and great trade ideas.
Great. Thank you so much. And lots to talk about today, lots to cover. Where would you like to begin?
I suppose we can start with the equities. You might as well just start there, huh?
Sure.
Let me go to, we'll just change pages. Hopefully I'm on the right page. You'll have to tell me because when I record, my page doesn't light up when I change. So do you see the S&P bond spread?
Yes.
Okay. I'm only asking because last time
just to make sure.
I was on the wrong page the whole time.
Yep.
Okay. So this is basically a channel line from, last March's low. So this is well over a year. And the indices have been, bullish with a couple of small breaks.
Mm-hmm.
And I still have higher targets and everything. So you wanted to look at the risk spreads, and this is the first one that we needed to take a look at. The NASDAQ bonds, let's just pull that up.
Yep.
Just the fib extensions off of this swing, just the 24 swing from the high to the low. That's basically 1,000 NASDAQ points. Has higher targets. So I would expect it to come up in here. So the spreads still look positive. And what I do is I like to look at the spreads to keep me out of trouble from either thinking that we're going to break or something else is afoot.
Yeah.
What do I have under there? Okay. So as long as I have the Nikkei up here, let's just take a quick look at it. I have a target in the Nikkei right now that I'm waiting to be elected off of, and I need a weekly and sustained closes over basically 37,900. And then the ultimate target, the big swing count for the life of Nikkei is 63,000, basically roughly 63,400. And of course, It's going to stop all the way, but that is the ultimate target for the Nikkei if the yen stays here or keeps weakening.
I see.
So, on my charts down here.
Are we able to take a look at the yen
Yep.
in that regard? Yeah.
Yeah, the yen, the game is 152 in the yen. So over 152 it goes again.
Uh-huh.
And that's really not even the right swing, but we'll take it down to here from the life of yen to the dollar low of yen. And, it can go to 183, even 216, if you're looking at this chart. It won't make the Chinese very happy, but that's where this dollar yen can go.
Yeah. So,
and as what Larry Williams and Ira were talking about was yen yuan. The key thing about this chart and what I've done with it is that you can see, if I squeeze it down, where the yen was in the 80s.
wow. Yeah.
You don't want to know that.
Yeah.
Okay.
Yeah.
All we care about for trading is modern China. Okay. And that was NAFTA. So you want NAFTA, which is 94, and you want the swings from NAFTA on up.
Mm-hmm.
And this is what you're looking for to do. So right now, the yen's trying to break down against the yuan and lead the weakening. If you look at just the yuan itself, you're going to come to a different conclusion, where it's just kind of hanging around here on a weekly, and it's really not doing that much. It's a huge consolidation pattern in the yuan.
Uh-huh.
But if you look at yen yuan, it's a different story.
Yeah.
And let's see what else I have here. I think I can even.
So we just gotta keep an eye in case there's any devaluation like in 1994, right? Just keep an eye on that. Yeah.
And then here it is. This is long yen, short yuan. And you can see how this is for the last year. It tried to reverse in here in November, and it really didn't get very far.
Yeah.
So let's see, what is this? And the yen futures don't go, or the yuan futures don't go back that far. So that's why you need to look at the cash. Here, let me just see where they go back to. Yeah, see, this goes back to 2013. If you look at a futures chart, you're looking at the wrong chart. Mm-hmm. So a big part of what I do is actually knowing what to look at.
Yeah, which specific chart?
Yeah, and 99% of the time, if they're a certified market technician, they're looking at the wrong chart.
Yeah. Yeah.
All right, so let's just take a look at the S&Ps.
Okay.
The S&Ps, this is what everybody's going to look at. They're going to look at this swing, and they're going to tell you where it's going to go. So somewhere, 34, 37, 51, 34 to 37, everybody's going to have that number. It's the wrong number. The target's 51.60. It's going to go there. It's going to print there. And then, and then I've got a 52.5 a half target. And if you just look at this, it can go a lot higher. So if we go back to what Larry and Ira were talking about on the previous podcast today,
yeah.
You really have to be aware of what happens at the July Fed meeting, because risk assets can go right through the roof. NASDAQ, here's the weekly.
Because fundamentally you're saying in July there could be like a weakening of the dollar, or lowering of rates on the short end.
Well, if those guys are, if Larry, if I heard it correctly, he seems to think that there was going to be a big funding problem.
Yes.
And
yeah.
if they cut rates because of the funding problem, they'll lower the amount that they have to fund every month.
Yeah, servicing. Yeah.
I think that's just going to be jet fuel for the stocks. And then you have to see where that rally, I would say, just historically, I'd look for it to run out of steam in the first week in October.
Wow.
So, I'm just taking it level to level at this point.
Yes.
There's plenty of opportunity every day.
Yep.
I mean, with SMCI moving here, what am I gotta.
Yeah, let's take a look.
I have two targets in the NASDAQ that I generated in December. Okay.
Yes.
The first target was 17,298 was the first target. That was yesterday's low. 18,042.5 is the second target. And that's what we rolled back from for that 700-point break we just had midweek. And my ultimate target is almost 21,000.
Wow.
So 20,000, you're going to get a violent reaction in the NASDAQ just because it's a natural number.
Mm-hmm.
So, I mean, that's just, and I have no desire to have anything to really do with the Russell, even though everybody seems to want to buy the dogs. Well, I mean, the risk spread's okay, but it's not where you're going to make your money.
Yeah. Interesting.
Dow made new highs today.
Dow, yeah.
This is its first target of 39,000.
Okay.
And I got another, another 3,600 points to go to the next target. So I'm not getting in the way of this stuff. I know what I can do.
And you mentioned just earlier, I guess the SMCI you wanted to take a look at.
Let's just take a look at a couple of those because they've been great trading vehicles.
Yeah.
Great. Bookvar got my attention the other day because he was the one that said I'd never seen a stock at 99% RSI. That was this day.
Yeah.
On the 15th. And then it gapped up $60.
Oh my, right.
So it opened up and everybody tried to sell it out of the box and it rallied.
Yeah.
And then broke. So I don't know, when it was in here, I said minimally it was going to break $100. And then, to at least come down and fill the first gap, it went down and filled the second gap. And then, the next day it went all the way back down to the balance line and bounced, which was basically just under $700. And when I see a green line like that on the cloud, I don't have to do a lot of calculation. I just know that's a low risk buy zone.
Yeah.
And this is Wednesday. I have my Wednesdays colored so I know what day of the week it is. And rule number one, you don't go home short on a Wednesday in a bull market.
Yeah, that's
so
words of wisdom, for Wednesdays. Yeah.
Here we are. Now we've come all the way back up and retested this February 15th close within $3, which is basically hitting it in super micro, the way that trades. And one of our room members trades it. She's really good. She's ex-Goldman, and she trades options. And she's been trading this thing back and forth. She's really good at it.
Yeah.
So the other one I liked yesterday was, I liked the low in Qualcomm yesterday, But I really like the low in Broadcom, which I pointed out to everybody while it was happening. Because Broadcom came down and gave you a free trade right there at this gap. That's a 123.09. That's the low risk buy zone into this cloud balance line.
Yep.
So from a technical standpoint, I spent a lot of time during the day, looking for these low risk setups. Like today, I think there was a bunch of people that were long Microsoft, and I said basically 412 was going to be about it today, because that was just some technical stuff off of this breakdown area.
Yeah.
Everything looks good. I mean, it's just a matter of where you get trade location.
Yeah.
And it's hard. You got to wait. You got to wait for midweek.
Mm-hmm.
Tuesdays, Wednesdays, sometimes Thursdays, but we'll see what tomorrow brings tomorrow.
Interesting. And you want to take a look at some of the maybe the fertilizers?
Sure.
Yeah. Agricultural fertilizers seem to be moving today.
Let me get that up. Yeah.
I got.
Am I on the right page with you?
Yeah, Intrepid Potash, I'm seeing.
Okay. So Intrepid Potash, still looks pretty good. Mosaic is the one that broke out. This has just been consolidating in all these moving averages and momentum lines. And today it was just a huge breakout in Mosaic. So now you got to wait and see if you get some back and fill, and you can get on that one again.
Yeah.
Nutrient,
yeah.
Same thing. So those two look the best. CF Industries.
Yeah.
I sent. And this is what I really like is rice.
Okay. Yeah. Commodity.
Yeah. As far as the commodities, and everybody wants to be in the commodities, this is the one I like the best. I mean, this is, besides, cattle's already gone through the moon and back, but this is the grain that, first of all, most people eat. I think the fundamentals between all the droughts around the world and everything else is helping this. So you got a weather story there that's positive. And, this is the one I want to keep an eye on to go again.
Yeah.
And I'll have to go back and do some old work on this, because I can create levels in this too, which I haven't done because I never really followed it before. But today it was gasoline, heating oil, which put in bottoming patterns. I know that. Just let me go to this. As long as we're talking about commodities.
Yeah, on the energy commodities.
Here, where's my stuff?
You're mentioning oil prior to the beginning of
So
our discussion.
let's take a look at the oil. The oil's trying to go.
79 is some critical level, I think you.
Yeah,
mentioned.
well, it's a 4-year average, 79.57.
Okay.
So we start getting over that, then I think you get the $2 to the 81.57 level, or 37 level, which is just above the cloud and weekly resistance. And this is a balance line, or almost like a 50% level. Above that, I think it gets going.
Wow.
And I know that Bookvar was looking for that one to go, And if you look at it quarterly, there's room back to almost $97.
Yeah. Yeah. Last week we had the podcast. Yeah, he mentioned $100. He also mentioned the fertilizers also as well. Very interesting.
Yeah. So, I mean, that's what I love about your podcast, is because it makes me look at stuff that
Okay.
in longer term time frames that I generally wouldn't look at. And then I'm trying to figure out the catalyst from A to B.
Yeah.
What else went today? Hold on a second.
Anything on like the metals, industrial metals, precious metals?
Here, and gasoline's getting ready to go too. That ought to make everybody happy before the election.
Oh no, yeah. Fill your tank, yeah.
The gold, the gold's kind of stuck for me. Hold on, let me get this. Let me get rid of these charts. I like to use these long-term point and figures just to show me how things are moving.
Yeah.
And you need into the you need a higher high than today to get this to go up, another $20.
See.
And I think that's a tough go against with what the bonds have been doing. And the gold and euro today put in an ORL day. That's not a good pattern. So I'm not quite sure. Hold on, let me get it. Right here. So they completely got out of that trade. And you need the gold and euro and the yen and gold denominated in yen to keep going, to drag the gold up.
Okay.
It's my guard dog.
Oh yeah. Okay.
Little corgi. Come on.
And the silver, I assume, is similar to gold.
I stopped looking at the silver because every time the guys try to trade it, they usually get killed.
I see.
And so here, I have it right here. I'll pull it up. To me, that's nowhere. And whatever day you want to trade the platinum against, gold, platinum, silver, you want to get into the nitty gritty of all those spreads and try to figure out a trade. I mean,
yeah.
It's there's not enough money in that right now.
Okay.
To concentrate on it with everything that's going on with the equity names.
I see.
So I just haven't been looking at it.
Yeah. Better things to look at more easily. The industrial metals like copper.
I don't think you want to do anything with it. I mean, it looks like it wants to break out again, but I'm not going there. I mean, who's buying it?
Yeah.
And let me just see one other thing.
Yeah, right now seeing the pattern recognition.
Hold on. Oh, is this where we're at here?
Yeah.
Okay. All right. So
yeah.
Let me see where I've got the copper. Here it is. See, they stopped they stopped quoting the ruble January 5th.
Yeah.
Which makes me believe that all Russian trade is now being done with Bitcoin.
Okay.
Not to be a conspiracy theorist, but you got to wonder, right? Here,
yeah.
Copper denominated in yuan is putting in a bottoming pattern today. You got to see if this follows through tomorrow.
Interesting.
Yeah, so you got to go look at IRA 101s, see how it looks denominated in another currency and see if there's demand coming from somewhere.
Yeah.
And it's still hanging in there against the 30-year bond. And those are monthly charts.
Uh-huh.
Yeah, so that's a monthly. Let me take it down a couple of time frames.
Sure.
Yeah, the weekly looks okay, and it's poked out on the daily. So you gotta be careful where you put that on. The other thing that's going on today is heating oils trying to bottom. Gasoline's trying to bottom again and go.
Wow.
The Swiss bonds, I think this is a bad indicator because there's about 2 contracts traded.
Mhm.
So I don't look at that as indicative to anything. Though a couple of things you asked me about, and I'll look at them right now as we're on this page, is that the Bunds basically look just like the 30-year bonds. If you take it out to a quarterly chart, it's really similar.
Okay.
So I would just look at the Bunds. I have to look at all that in relationship to what our long end's doing. They're the oats. The Italians look kind of the same way. These are quarterly charts, but obviously the Bunds have more history.
Mm-hmm.
So it's a better indicator because the Bunds go back to 88.
Yeah.
And when you look at a quarterly cloud and you look at where it is on the quarterly cloud, that's not good. Now let's look at and when you look at the U.S. bonds, you have to look at the Pitt session, which is U.S., not USA, or you're going to be looking at the wrong thing. So let me take you over to my yield page. Here's the life of 30-year futures. This is what's running the bond market, not the yield. All these guys look at the yield chart.
Yeah.
This is the true chart right here.
Yeah.
And everybody else is looking at this. It's the wrong chart. Okay.
Uh-huh.
This is the all session. The electronics started trading in 92. It's the wrong chart. So if you look at the bonds, basically interest rates are at a 50-year average or a 40-year average.
Yeah.
Right here.
70s. Yeah.
So this is the chart that I look at for everything. This tells you what the currencies are going to do, what the gold's going to do.
Yeah.
And you would think that with the size of this move, and I think, I talked about it a couple of podcasts, he was surprised that the gold, for whatever reason, is held up.
Yeah, still hanging in there.
This whole interest rate reset. And, the breaks in the equities stopped when, originally they were breaking with the bonds, and then they just got to a point where they were accepting the interest rate regime, and they started trading on their own again.
And any indication of where we go here for trend wise?
Well, I'm looking at this mid 116s. Okay. And if they start closing below that again, then I think you can get anywhere from an 8 to 16-point break.
Wow.
So, I'm waiting for the market to tell me what it's going to do.
Yeah.
Now here's the other piece of that I look at, and I'm going to show it to you. Are we back at this page here with my?
This is copper. Yeah.
Yeah,
Copper.
perfect. Okay.
Yeah.
This is the whole downtrend channel off a 32 by 3-point figure in the 30-year futures. And I love this chart. So we're right back in on the mid-channel line here. And we've dropped out of it before and come back. We held it down here at that 108 level. And right now it needs back above 120.25 or a 120.25 print to think that this is the high-end rates. So I have a short-term and a long-term one that I look at to try to see how it's moving from point A to point B. But the bonds are something that you do not trade for anything less than a full point if you're looking at it. Any day trader that's looking at trading the bonds for anything less than a full point is needs a good therapist.
Yeah.
Because their risk reward is just way out of whack.
Yeah.
And here's the yields. So if I give you a yield chart, a 30-year yield chart, last year we were looking for 5%. We got that.
Uh-huh.
And it could still go back there. It's this 4.6, and then if it starts getting through 4.6, it can go again. So that's the life of yield.
And
I think the futures chart gives you a better look.
Yeah. What could the yield map to based on that worst
Well, if this says 8%.
Oh, okay, yeah.
Okay.
We have to, okay.
So I mean,
yeah.
the opening yield was 7.7%. So when you look at one of these 50-year charts, at some point in time, we come back to these levels.
Mm-hmm.
I'm not saying when or how, but at some point, it's very real possibility we come back there.
Wow.
And I'll give you a real good example. There's the Aussie dollar. There was the opening range of the Aussie in 1971.
Mm-hmm.
I'm still kicking myself for the order. I missed selling this by 12 cents, 12 ticks.
Like 12 years ago type thing, or
Yeah, in 08, I had an order up there resting for like 9 months.
Wow.
We went up there in beginning of 2011. So, when you see something like this, the possibility can always go back.
Yeah.
I'm not saying what type of world we're going to live in if that happens, but that's
anarchy.
I'm not making a fundamental case. I'm just saying, price-wise, what something can do.
Mm-hmm.
So I always watch for it.
Okay. Really, is it possible to look at the emerging markets? We touched upon that a little bit today with Larry McDonald. Last week with Peter Bookvar also. They got like maybe Brazil or
I can
Colombia.
Let's go right
Argentina.
back here because I don't want to have to restart my computer for you.
Yeah.
Argentina
was up a lot today because they had the first budget surplus in 12 years, I think.
Yeah, well, there's Mexico. There's Brazil. You can't really buy that here. The one name I liked that you had given me Oh, hold on. Wrong thing. Was this Pampa Energy?
Oh yeah, Pampa, yeah, the energy, yeah. Argentina.
Yeah. This had a nice consolidation pattern down here, into this area. It looks like it's trying to hold here. The real looks okay. That's just a big sideways pattern in the real.
Yeah.
What else were we talking about?
Maybe like Colombia, even the Hang Seng, right, I think was mentioned by Faber and also Larry.
The Hang Seng looked terrible. Hold on a second. Let me get the country ETF up for that.
Yeah.
So some of these ETF, like the Hang Seng, I don't have that data, and I wouldn't trust the ETF data. This is Colombia.
Oh yeah, GXG. Yeah.
Yeah. And it's right at resistance. So
Okay.
I'm not, it needs over 23, probably 23.60 to really start to go. And then I suppose it can go a couple of bucks.
Okay.
Well, I looked at one. Just 1 second. Let me just.
Yeah, there's also
Australia acts good. France is at almost all-time highs.
oh,
Let's see here. The DAX put in all-time highs. So I don't want to look at the ETF there. I don't want to look at EWG. I just, if you have a choice and you can look at the Hang Seng or the Shanghai Comp or something else,
yeah.
you want to use that data versus the ETFs because there's not enough data in them.
I see. Mexico, maybe Mexico.
Yeah.
Look at the EWW. I think,
yeah. And that needs. It's going to have trouble at 69.5. That was the quarterly breakdown from January 2013. When we start closing above this on a weekly basis, then it'll go again.
That's it.
And then you can use that for risk management coming back down. If you bought it now, you'd have to risk 65.73. And I don't want to, I'm not really a fan of giving it that much.
Good.
What else are we looking at? We looked at the ags, we looked at gold. What is it? EWs.
Maybe like uranium.
Okay.
Yeah. Either the.
Yeah, the uranium, like the X uranium ETF.
Yeah.
The long term looks okay, but when you start breaking it down, the shorter time frames, it's struggling and it's breaking down on the weeklies and the dailies. So you want to see it hold 26.25 at this point.
Yeah.
Let's look at Camco. Yeah, Camco blew off. It got today. It got the monthly sell stops.
Wow.
So you got to be careful of that. I think it holds 39. Yeah, it's got to hold 39. The 200 days 38. So what are a couple of the other ones that?
Did we look at the banks, the Japanese banks, or just?
No, I've got them.
Okay. Yeah.
Here's Mitsubishi Financial, and Ira pointed out that it got the knockout stops today that he's been looking for 3 years.
Yeah. Oh wow. Yeah.
Yeah. So this is not, that's the half a life of that stock.
Yeah.
This is a big level. Okay. Now, when you come back and you look at it off a quarterly and the cloud, you can see the 50% there, and it got the knockout stops. So it cleaned out the decks there, and it needs a close over basically, let's say 10 and a quarter on a weekly basis to extend again.
Yeah.
There's Nomura. That's right into basically cloud resistance right now on a quarterly.
Mm.
Anywhere up into 610 is going to be trouble.
Mm.
Let's see what else we got here. Sumitomo, same thing. That opened up and backed off a little bit. And that's making new all-time highs. So with this, you need to see it keep closing over 1059 on a weekly basis. Okay?
Mm-hmm.
To go. And then it can really go. Because there's huge upside. Mitsuo is the one that was, it looks like it wants to go. I think it needs over 390 at least.
So these are in the currency of
No, these are, I think, US dollars. These are ADRs.
oh, okay. Okay. So it has that currency factored in.
Look at how bad Sony looks. Okay. But then you go look at Toyota. Come on. Let me hit the right button for a change. There we go. And Toyota looks great.
Yeah.
This is, that whole hybrid game that you guys have been talking about.
Yeah. Yeah. And even also just hydrogen based cars, not fuel cell, but pure hydrogen type based cars. Yeah, Toyota's done a lot of leadership on that.
I haven't looked at Honda and some of the other ones, but it's already at its first extension today. It can easily go another $20 to $30.
Oh, no.
So yeah, it gets back to 213. You can give it a go with a tight stop. You want to trade it against this 22 high. All right, what else?
Great. Yeah, I think yeah, I mean, if you have anything else, I think I've got everything I wanted to
What was it?
cover.
I looked at one stock today that was just out of control. What was it? It wasn't
Okay.
a theme stock. It was that I'd never really looked at before.
Uh-huh.
Lind PLC. These guys are in the gas business worldwide. This has been the biggest bull move ever. Look at this. I never looked at this before this until today. I actually accidentally typed it in.
Oh yeah, these guys. Yeah, I know. There's some renewable play in there somewhere. The technologies they have, yeah.
I mean, I wouldn't buy it here, but this thing ever pulls back somewhere where you have some trade location, then great. But if you just look at it,
lower left to upper right.
yeah. Oh man.
Yeah.
I mean, this thing looks like just if you just drew that, it's going another $30. But I don't want to chase that. But it's an interesting name. It's worth keeping an eye on.
Yeah. Cool. Yeah, this has been great. Any other things you wanted to discover?
Yeah, I mean,
But this has been awesome. Yeah,
really spending a lot of time every day trying to figure out, how we're moving from A to B and when you can get away with buying stuff.
Yeah.
And what's in trend and what's not in trend. And, I'm not, Fridays are generally, we've seen Fridays where they can go either way. So, you just got to be really patient for the big breaks. And you usually get them midweek.
Yeah. Well, great. Yeah. How can our listeners, viewers learn more about your work and subscribe to your service? I think you had a page where you can show the contact information.
Here it is. So all you have to do is go to whitewavetradingstrategies.com and put in an email address and a name. And you can come in and join us for 30 days. And you'll get I might write once or twice a day, usually early in the morning, and then I might write something mid-afternoon. But most of the work is done in the room, and you'll get an invitation to the room. And if for some reason you don't get on the list, send me an email. I'll make sure you're in.
Yeah, and it's fascinating discussions in the room. Like you get a whole university education, in not only technical analysis but fundamental analysis. So lots of traders with different approaches, different strategies.
Yeah, there's really a cross section of styles in the room, and it's great. I mean, the conference options traders, swing traders, day traders, fundamental people.
Yeah.
So it's fun.
Awesome. Great. It's been awesome insight. Thank you so much, Judd.
Well, thank you, Richard. I really appreciate it.
Yeah.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.